you can't really fail at it unless you buy the wrong stock or just get excited at the wrong time. It's just hugely important. And if you invest in yourself, nobody can take it away from you. I mean, would be, in my particular case, it would be going through the 20,000 pages. This country has done an incredible job in terms of the deployment of resources and I had started investing when I was 11. I just dithered away until when I was 7 and 8 and 9. So unfortunately, I didn't get started until I was 11. But I bought my first stock when I was 11, and then I experimented with a whole bunch of things, the timing of stocks and charting and doing all these crazy things. It was a lot of fun. Profitless, but a lot of fun. And I did that until I was 19. And I read all the books on investing in the public library, and I ate it up. It was fascinating to me, but I had no framework. I was just searching for something. I was hoping that little things on a chart would tell me something about what a stock was going to do. It was kind of crazy, but everybody else was doing it, so I figured I'd do it too. We had actually previously been in American Express in the 60s in Disney, so there are companies we're familiar with. We generally sell, we would sell if we needed money for something else, but that has not been the problem in the last 10 or 15 years. 40 years ago, my sales were all because I found something that I liked even better. I hated to sell what I sold, but I also didn't want to borrow money. So I would reluctantly sell something that I thought was terribly cheap to buy something that was even cheaper. But that doesn't mean it does it all the time. And there are times when the market had the change in intrinsic value, and there are times when obviously then that it will lag behind. So it's far from perfect, but it's better than most.
You literally every day have thousands of the major American corporations offered to you at a price that changes daily, and you don't have to make any decisions. You have to make nothing is forced upon you. So there are no called strikes in the business. The pitcher just stands there and throws balls at you, and if you're playing real baseball and it's between the knees and the shoulders, you either swing or you get a strike called on you. If you get too many called on you, you're out. In the securities business, you sit there and they throw U.S. Steel at 25, and they throw General Motors at 68, and you don't have to swing at any of them. They may be wonderful pitches to swing at, but if you don't know enough, you don't have to swing. And you can sit there and watch thousands of pitches, and finally you get one right there where you want it, something that you understand, and then you swing. And
so you might not.
I don't advocate, I may practice, but I don't advocate extreme frugality. And I don't say that it's always better to be saving 10% of your income instead of 5% of your income. I think it's crazy to be spending 105% of your income, and I think that leads to all kinds of problems, and I get letters from people every day that have experienced those problems. My personal opinion is if you take unleveraged returns against unleveraged common stocks, I do not think what is being purchased today and marketed today would work well. But if you can borrow money, if you can buy assets that will yield 7 or 8%, and you can borrow enough money at 4 or 5%, and you don't have any covenants to meet, you're going to have some bankruptcies, but you're going to also have better results in many cases. It's not something that interests us at all. We are not going to leverage up Berkshire. If we'd leveraged up Berkshire, we'd have made a whole lot more money, obviously, over the years. But both Charlie and I probably have seen some more high IQ people, really extraordinarily high IQ people, destroyed by leverage. I just read and read and read. I probably read 5 to 6 hours a day. I don't read as fast now as when I was younger, but I read 5 daily newspapers. I read a fair number of magazines. I read 10Ks. I read annual reports, and I read a lot of other things too. So I've always enjoyed reading. I love reading biographies, for example.
And you process information very quickly.
Well, I have some filters in my mind. So if somebody calls me about an investment in a business or an investment in securities, I usually know in 2 or 3 minutes whether I have an interest, and I don't waste any time with the ones in which I don't have an interest. I always worry a little bit about even appearing rude, because I can tell very, very, very quickly whether it's going to be something that's will lead to something, or whether it's it's just a half an hour, an hour, or 2 hours of chatter.
Well, when Charlie and I met in 1959, we were introduced by the Davis family, and they predicted that within 30 minutes we would either not be able to stand each other or we would get along terrifically. And that was a fairly insightful analysis, actually, by the Davises, because you had two personalities that both had some tendencies toward dominance in certain situations. But we hit it off. We have disagreed, but we have never had an argument that I can remember at all in 43 years, and yet we both have strong opinions, and they aren't the same strong opinions at times. But the truth is, we've had an enormous amount of fun together. We continue to have an enormous amount of fun, and nothing will change that. Basically,
we look for initiative or energy, and we look for integrity. And if they don't have the latter, the first two will kill you. Because if you're going to get somebody without integrity, you want them lazy and dumb. I mean, you don't want them smart and energetic. So it's that third quality, but everything about that quality is your choice. You can't change the way you are wired much, but you can change a lot of what you do with that wiring. When you write down the qualities of that person that you'd like to buy 10% of, look at that list and ask yourself, is there anything on that list I couldn't do?
If you have a temperament that when others are fearful, you're going to get scared yourself, you are not going to make a lot of money in securities over time in all probability. And people really, if they didn't look at quotations, but of course the whole world is urging them to look at quotations, and more than that, do something based on small changes in quotations. But if you didn't, think how much more rational, we've talked about it before, but think how much more rational investing in a farm is than the way many people buy stocks. If you buy a farm, do you get a quote next week? Do you get a quote next month? If you buy an apartment house, do you get a quote next week or month? No, you look at the apartment house or the farm and you say, I expected it to produce so many bushels of soybeans and corn, and if it does that, it meets my expectations. But they buy a stock and they think if it goes up, it's wonderful, and if it goes down, it's bad. We think just the opposite. When it goes down, we love it because we'll buy more, and if it goes up, it kills us to buy more.
I mean, I can buy anything I want, basically.
To have time is the most precious thing you can have.
I better be careful with it. Yeah. There's no way I will be able to buy more time.
No, it's been about 2% a year now since the fall of 2009, 8 years, and it's been remarkably close to that most of the time. The way they report those quarterly numbers is they take the quarter and change and multiply by 4. It's not year over year, so it gets a little tricky that way. If you're off by a tenth, it makes it 4/10 in the annual figure they report. And with seasonal adjustments and everything, you never want to take any quarter too seriously. I would guess we're in about a 2% growth economy now, and as I've said, every now and then we think it's accelerating, and every now and then we think maybe there's a double dip or something, and it just seems to be a couple percent. And certain industries will pick up quite fast. The autos caught on faster than homes, but now they're tailing down. But 2% is not bad, incidentally.